what is the hidden skill that hopefully helps you win deals in this traditional company space where the older gentlemen, oftentimes in their 50s, 60s, 70s, wanting to sell their life's work, something they've built for decades, and now they're looking for a new owner, and how you really can be this right buyer for them. And this is a skill which is oftentimes overlooked, but it's listening, and it's listening during the due diligence. Because when many people, what they think separates those great business buyers from everyone else, they think it has to be about sharper financial models, better capital structure, or just being extremely clever with all those negotiation tactics. But personally, myself, after meeting hundreds of business owners, these are simple people with families they've been taking care of. Oftentimes, they are the, if I can say, like the main guy in their family who's been taking care of the kids, the wife. And I've also had a chance to meet few very smart and experienced women who's been running their businesses, and they are this head of their family because the businesses, these are profitable businesses. They've been doing that oftentimes for many decades. Again, it's not just all about those financial models, better capital structures, and being this extremely clever negotiator. And when you look around in the large deals, what the huge investors like take Warren Buffett or even Shopify, the CEO of Shopify, I want to share those stories with you because there are some great lessons which yourself, when looking for great deals and maybe even closing those key customers, by implementing the listening, you can hopefully close many more deals. So the thing here is, obviously you can't be passive. You have to be like actively listening, but it's not so much about being extremely strategic, but more about being genuinely interested in the seller, in the business. And it's very important how you are able to make the seller feel, and the way you understand him, his business, his people, and that he would feel respected and safe enough to hand over their life's work to you, pretty much. Because what we often forget is that in small and medium-sized business acquisitions, we are not just buying cash flow or EBITDA multiples. We are buying the story which have been built over the, again, as I said, decades. And the story itself has been written over decades by a person who poured everything they had into it. Their risk tolerance, their resilience, their identity, and their family's past and the future, and obviously the present as well. And for most sellers, their company isn't an asset sitting on a balance sheet. It's the sum of their adult life. It represents every late night, every decision that almost broke them, and every person who took a chance on them. So when they decide to sell, they are not only calculating valuation multiples, they are wondering whether you, as a buyer, will protect what they built, and whether you'll care for the people, whether you'll continue their legacy. This is very important. And that's why listening is not just being polite, it's due diligence of the highest order, because you will get so many great signs by just listening. Signs on the positive side and signs on the negative side, because there might be stories or lessons or situations where you will listen something and you're like, okay, this might be not the best business to buy for various reasons. And before moving forward, I want to give you a few examples. One of the best illustrations of this comes from Warren Buffett and him acquiring the Nebraska Furniture Mart back in 1983. And the Buffett met the founder, Rose Plumpkin, or Mrs. B, as everyone called her, a Russian immigrant in her late 80s who had built one of the largest furniture stores in the country. She didn't have a team of lawyers or data room full of spreadsheets. She just had her immigrant story. I did a bit of research, and it said that Buffett spent an afternoon sitting in her store, listening on her immigrant story, how she started with just $500, how when she arrived to US, she really couldn't read or write English, but how she worked for 7 days a week for literally decades. Again, when having this conversation, I'm sure when Warren Buffett was having this, there are no presentations or there are no like super sophisticated financial deep dives. It's just two people talking, like having a cup of coffee and just talking. During this conversation, at the end of this conversation, Buffett said that he would like to buy her business, and her first question was, for how much? And Buffett replied, whatever is fair. And they literally shook hands on the spot. There were, again, no lawyers, no contract revisions. And Buffett later said that if you can't trust a person like Mrs. B, who can you trust? And that deal was worth $60 million. And this was built entirely on trust that came from listening. Because Buffett wasn't just hearing her numbers. He was just listening her story. Like the grit, the immigrant mentality of what she has been able to go through in order to achieve what's now like Nebraska Furniture Mart. So the power of listening someone's story. And in every due diligence process, there are hidden signals buried in conversation. Because when a founder says, I still sign every check myself, it's an important lesson because that's oftentimes telling you something about the control, about how decisions are made, about whether the business can run without them. When they describe the team as a family, that might sound heartwarming, but it can also hint at emotional dependency, at the reluctance of professionalize or change. And good business buyers hear those words, and great business acquirers hear the meaning underneath them, because behind every sentence there is probably something good, or on the other hand, it could be something bad, like one simple conversation for 30 minutes, and you might hear something, and you will get the best hints that this might not be the best business. And it's important to listen those sentences and analyze those while having those conversations, because when hearing something, you can start asking follow-up questions, and this could lead to something. Another story is Shopify. And this example of how listening becomes a strategic advantage. Back in 2013, they were acquiring small developer apps to strengthen their ecosystem. And their CEO, president, Harley Finkenstein, he said the most important part wasn't the valuation. It was how the founders felt about joining Shopify. One developer was deeply hesitant to sell. His small team had become his identity, and instead of pushing him, what Harley did, he spent hours talking about the founder's goals, about his team, about his fears, and his hopes for what the product could become. By the end, the founder said, I sold because I felt like they actually cared about what we built. And that acquisition became one of the Spotify's smoothest integrations. Not because, again, of the structure or the synergy, but because the empathy. And listening also gives you leverage, because once seller feels heard, they pretty much like relax, and they become to tell you things they wouldn't have otherwise revealed. And that's what I've seen when spending sometimes even like 3-4 hours in their building. First, they maybe just tell their story. Then we walk around in a manufacturing facility. They tell the stories about each machinery. I like to ask various questions about how they were able to finance this. Did they pay all cash? Which bank they were using? And by asking those questions, you are like, I'm genuinely interested in how they were all doing this, because oftentimes in those small niche businesses, the founders have been just reinvesting all those all the cash flow back in the business for many, many years. And it's interesting to hear the stories about each machinery. So this gives you like leverage and knowledge about the specific industry. And they really open up if you do that. They start talking about their competitors. They start talking about the opportunities which they would maybe like to pursue, but because of the time, they are not able to do that because lack of people, lack of just capabilities of doing certain things, and you will learn so much. And again, if you ask those questions, it's an excellent due diligence for you, and it starts from the first conversation. And you have to be careful. Again, the biggest red flags, they never appear, I would say, on the paper, but they come out in conversation over the coffee when walking around in the warehouse asking about different products. And you start hearing things like, I probably shouldn't tell you this, but our plant manager's been thinking about leaving. Or our biggest customer has started asking for price concession. And people share those things because there are not too many people who are willing to go and spend half a day with them asking about their business, which is oftentimes the most important thing for them next to their family. But not too many people are willing to do this because people just keep sending emails. Those guys from Big Four, they just send emails. They very, very rarely just take this day to visit this traditional business owner. Like, I'm talking about the small businesses, earnings, EBITDA between 500,000 to 3 million. Not too many people are willing to do this hard work, getting to really know the owner and listening their story. Another example, David Cote, who led Honeywell through one of the most successful corporate turnarounds in modern history. And what he did, he took over in 2002. He didn't start with sweeping changes or PowerPoint strategy decks. He spent the first 6 months listening, hundreds of one-on-one conversations with employees at every level. He asked simple questions. What's working? What's broken? What's getting in your way? And from that listening, he learned that Honeywell problem wasn't really the strategy. It was the culture and the people, because people had lost the trust in leadership. And that single lesson over this half a year period shaped pretty much everything, because 15 years later, Honeywell market capitalization had grown by more than $100 billion. Again, listening wasn't passivity, it was diagnostic precision. And smart people do that. They just walk around different floors, meet with different employees, ask simple questions. What's working? What's broken? What could be better? What's getting in your way? Why you don't do this? What would you like to do? Things like this. And again, conversations like this, they will tell you just so much about the people and everything in the business. Another thing you have to listen when doing this listening part in due diligence is the language. If the seller calls their team a family and you respond by talking about human capital, you're signaling that you don't understand what the business means to them. Mirroring their language isn't manipulation. It's respect towards their people. It tells them, I see you. I value the world you've built. There's a story from Search Fund, not a guest on the podcast, but I was having this conversation, and a buyer was competing against two private equity firms, and they wanted to acquire a regional HVAC business. And the seller, he was like a typical owner-operator who had spent almost 40 years growing it with his brothers and cousins. The private equity firms spoke in terms of efficiency, margin expansion, all the numbers, but the searcher, the buyer, a simple guy, didn't have a financial background. He had a completely different approach. Started talking about the story. First, all started with the compliment of what this guy have been able to build over almost 4 decades. And saying nice things about the business, what he has built. And eventually, this led to situation where those two private equity firms, it was a small business, they offered 300,000 more, but the searcher, he won the deal. because there's a lesson here. Because one guy just built a exceptional relationship with the seller, and with private equity, they probably had many deals, similar deals going on at the same time. So maybe time-wise, maybe just skill set-wise, not too much about human to human, but yeah, they lost this deal, and this is a great lesson for folks wanting to buy a small traditional business. It's so often just human to human, just talking to the seller, understanding the story, and actually meaning this. Because if you don't do this, people will see that, and it's very hard to close a deal in this way. To go more specific, like how do you actually practice listening as part of due diligence? Start with a compliment, like actually meaning this. What they've built, it's fascinating oftentimes when you go and visit those business owners and see all those buildings which they've built, the machinery, the 50 people working there in one shift, like things like this. Like this is big things. It's rare. It's very hard to build a business like this. So start with a compliment. Start with the story, like who you are, why you do this, and ask different questions like how the company got started, what have been the toughest years, how they've been able to overgrow this, how themselves have grown over the years, what has been the most rewarding when it comes to all this, what has been the hardest periods for them, and start listening and really understanding the emotion, what they're trying to say, and then go more specific. As I said, asked about different machinery, asked about the industry, pros and cons, and ask a lot of follow-up questions like, tell me more about this, tell me more about that. Don't rush, have all the time needed. Drink this another cup of coffee, have another hour with them, just talk, just have this conversation, keep this conversation going, because what I've seen is even if they don't sell those business to you eventually, and there are many other buyers, they will remember you. They will call back to you. The other day, I just received a call. I tried to buy one business. It was like I met the owner we built a relationship over a year ago. I met him almost 10 times. We've had dinners. We've had those long walks in his office. And he now, very soon, within the next month or 6 weeks, he's going to sell his business to a strategic buyer. Very, very great offer, what he got. But he said that he's going to have a lot of liquidity. And he remembers me. And he wants to have a meeting with him, another dinner to discuss something. I don't know what it's going to be, but he's in his early 50s, and he's a very nice guy. And who knows where it turns out. But it was only possible because I met with him, like, seriously, like 10 times. We were walking around his business and did all those things what I've been sharing with you here. And it seems like it's rare. Not too many people are willing to do this. Driving another, maybe his business from my home is like 250 kilometers. So it's a pretty long drive. But if you're doing that in US, you maybe have to fly maybe for 5-6 hours. If you have to do it, just do it, because you never know. You just never know. And again, listening isn't just a soft skill. I believe it's a huge competitive advantage. It helps you, if you play long enough, it helps you win deals, smooth all sorts of different transactions, and it helps you to reveal the reality underneath the spreadsheets, the numbers, the logo, the slogans, the missions, the visions, and you really start understanding what is going on in here. Because when a founder feels that you truly understand what they've built, they don't just sell you a company, they invite you to carry their story forward. And if you understand this, there is a pool maintenance company in my area, and I met with those owners for a few times, and it's a very nice business, but it's an extremely high-paying job. That's what it is at the end of the day. And these guys were super honest on the first meeting. They said to me, yes, I met them a few more times to really understand, would it be possible to maybe hire someone to run this business? But these guys are such a such a generous guy saying that it's all nice, but it's just a high-paying job. They work like crazy long hours. They make a lot of money. It's been very stable business for the past like 10, 11 years. Every year, same amount of dividend. Doesn't really grow much, but one suggestion I gave to them was you should raise your prices because you're doing very well, but you can do even more better and your hourly rate will go up as well. But yeah, honest thing they said was like, you don't want to be in this business. It's just a crazy hours of work. It's very high paying job, but yeah, business wise, it's not the business, not a huge, you can't grow it to a huge business on the one hand, and on the other hand, if you start hiring people, it's the profits are not there. So that was the feedback I got from them. So for you as well, like the next time you sit down with the owner during due diligence, which again starts once you meet the owner, remember that there's a lot of additional information other than just numbers. And make sure you bring your analytical mind, bring also your curiosity, your humility, and silence. What I've learned that if you talk to having a conversation like this, have those long pauses. Otherwise, it's very hard to get those specific information because these guys are busy. Their minds are busy. They're always thinking about something. And if you go there wanting to acquire their business, wanting to get this additional information, one tip maybe, if you ask a question, just wait, count to 3 on your mind. Like, ask a question. When did you buy this machine and how did you finance this? And just stop, be quiet for 3 to 5 seconds. And every time the guy finishes the sentence, just wait. There's so many great answers which you'll get if you're just being quiet. And otherwise, if you just keep talking all the time, it's very hard to get those because there's not going to be a moment when he has time to think. And what's also surprising is that people don't really enjoy the silence. They just try to say something all the time, and that's what you need in this position. If you're extremely curious, you'll get so much information about the business, about the competitors, the future, the past, and all sorts of different things about their maybe key employees and things like this. But only if you're curious enough, if you're extremely humble, and you know how the silence work. But make sure you don't do, it really depends. You have to be like really good at reading people. If there is a guy who's like super intense, you don't want to have those very long pauses. Otherwise, this guy is just like, what's going on here? You're too slow, you know? You don't want to do this. I have to talk about the sponsor. Hear me out, because if you want to have all this due diligence done for you, take financials, customer data, legal, tax, and all those market insights done for you, so you can just decide whether you want to invest, whether you don't want to invest based on all the information they're giving to you, you should go and visit the site called capitalpad.com. I'll also put the link in the description, but this is the sponsor of this podcast. CapitalPad is the all-in-one deal platform built for accredited investors, business buyers. It really, what those guys are doing, they find deals, they analyze, do all those work, and they organize everything so you can just invest deal by deal. The smallest ticket is $25,000. Again, accredited investors only. They are great guys, sponsors of the podcast. Go to capitalpad.com. And if you learned something today, make sure you follow, because I'm gonna post those specific practical episodes. And this is Old Builders. Hopefully, we are not just buying businesses, but we are building legacies. So, thanks a lot for listening, and see you in the next episode.